Hello, this is Martin from Seek, the channel for learning about trading and investing. Welcome to weekly market analysis, the markets next week. And this is analysis for September 13, Monday, 2021. If you're not subscribed, please subscribe right away and share it to all of your friends and relatives and whoever you think may benefit. It doesn't cost you anything and it helps us a lot. Thank you. So without wasting time, let's get into the action. So what patterns do we see in the charts, right? It's just a brief, and next slides will have the charts for it. So weekly, it's an indecisive dodgy candle on the Nifty, right? So Nifty made another all-time high last week, right? And it was consolidating week, we can say, on Nifty. But Banknifty did a V-shaped move, another V-shape. It dipped and then recovered. Dipped 2% and then recovered some of it, right? It forms a hammer, which is still an inside candle, right? And still dealing with 37,000. That's what I can say. Nifty daily candle, you can see that's a green bar, but it's an inside bar. So we've or a week it was consolidating. So weekly for Bank Nifty, it's a spinning top. It's a bearish, small body candle. That's the latest on the daily, and it is facing a resistance 37. It's a resistance zone. It's near to the 37,000 kind of zone. And Nifty, if you look at the Bollinger Bands, the expansion is already happened in Nifty earlier, and the Bank Nifty expansion has also happened last week. So this is the chart for the Nifty. You can see that daily time frames you have consolidation, some kind of flag formation. The flag and pole is the pole and the flag, right? This could be breaking out upwards is what it looks like. There is a possibility of that, unless it retraces further down to the Fibonacci levels, right? Otherwise it will be a flag formation which can break upside. The last candle is green, and here in the Bank Nifty on the right side you can see that it's a spinning top, which is bearish. It's also, you can see that it is done a V-shaped move, 1 2 3 down, 1 2 down 2 up, right? That's what happened. It's a truncated week last week, right? So V-shaped move with a bullish hammer, bounce from that change in polarity zone, and it has bounced nicely the first day, and then the second day it formed a doji. It could form an inside bar also. It could not go above the previous day's high, but there is a bounce that has happened. There is a bullishness there. And on weekly time frame, you can see that this is a dodgy indecisiveness after a big move on the previous breakout move. Bank Nifty on the right side, weekly candle, if you see, it's a bullish hammer. So bull presence is seen here. The Bank Nifty is, because of that reversal, weekly formation has happened. It dipped and then, so look at the candle before that. It's still could not go above that. It is a clear bullish candle. Is what this previous weeks, right? This is previous week Nifty candle. Look at that long white candle, and after that you have a small consolidation that happened here. Also after that it had a dip and then it tried to again move up. So bull process is very much seen on a medium term basis. Bollinger Bands expansion has already happened long back. Once the breakout happened from this level 16,500 plus, and here also the expansion has already happened. So the skews thing is over, right? So it would be, the trend is on the upside, right? There is no more consolidation. Now there is a consolidation again that has to happen for us to assume that it will go down, right? Yeah, it doesn't go as a flash crash from there. There's no indications of that. At this great momentum support levels and all that. So Bollinger Band shows that support resistances. Let's quickly go through. The support is there. First trend at 17,150, 7,150 levels. Then downside you have 16,700 and 750 level, and 16,500 and 600 level. Third support. Resistance is upward is 17,450, which is where it is stuck right now, and that also happened to be fib extension 50% and fib 61% 750. The next resistance level that can be projected upside. These are all swing lows on the support side of a Nifty, and these are all Fibonacci Fib projection uh, levels which are broken earlier, and Fib 23 retracement level is what the last third support that you see there. You can see them in the charts in the next slide. Bank Nifty, you can see that 36,200 to 36,500 is where the supports below is, right? And 35,500 and 35,800 is where the Fibonacci 23 retracement level is, which is the next support, and then below that you have 35,000, 35,400 level, which is the previous resistance zone. So on the upside, first thing is 37,000 rounding number has to be converted. Second is 37,700 all-time has. These two are the resistances on the upside. So that's what the support resistance level is. Let's see in the chart the same thing that we're talking about, right? It's at 17,450. Then you have the previous support here, where it took a small dip, and then before it broke it again, so it can take some support back here if it moves down. And below that you have the gap, a bullish kicker gap that has formed, and also can support at 16,700, 750 levels, and then you have 16,500, 600 levels, right? Okay. Bank Nifty, you can see that it has conquered 36,000, then it has conquered 36,500. Now it is fighting 37,000 and the 37,700 all-time highs where it has to move up as the resistances. Downside, you have the same support zones where it is trying to hold on, 36,000, 36,500, and below that you have this zone where you have a Fibonacci retracement of 23% also coming to play. Right, so this is enough of support on the downside, and then what has happened last week is it dipped and took the support and then bounced back from the support zone. The momentum and trend, if you look at Nifty and Bank Nifty, both maintains bullish momentum, RSI momentum, right? Bullish in the sense about 60. So Bank Nifty has a range shift and a bullish momentum as we see that in the next chart. So this is very positive. Bank Nifty is looks bullish on the charts more than Nifty. Nifty is already in the all-time uncharted territory, super bullish, but Bank Nifty is showing that there is signs of bullish moments. Range shift of the momentum is where the momentum moves from the sideways to and the bullish momentum is in the progress on daily time frame that could move it up. So Nifty, the ADX trend indicator is bullish and rising with strength, also rising up and maintaining bullishness on the weekly and the monthly time frames. So ADX indicators are all bullish and it is rising up on both Nifty and Bank Nifty if you look at the trend analysis. So momentum and the trend for both indices are bullish. You can see that momentum, right? It's in the bull zones. So right side you have the Bank Nifty, it's also in the bull zones, and the divergences that you see here, this is bullish, right? So this shows that Bank Nifty has much chance of further moving upwards, and the trend and indicators, you can see that the green, which is the strength of the trend, is moving upwards, and on the right side Bank Nifty you have seen that the ADX trend is on the upside. And this is the open interest analysis and the volatility, right? So you can see the VIX charts on the right side. The VIX has fallen down 8%. It had moved up 8% earlier, but it has fallen down again. So the open interest data. So that is the open interest analysis details that you can see there downside. So 16,500 is the highest support, highest put writing, and after that you have 17,300 highest put writing. Then the resistance is 18,000 has call writing, and 17,400 is the next level where the call writing is seen. So this data cannot be fully relied on because there is no trading that happened on Friday, which is the first day after the new expiry for the 16th September happened. So still we can look at that. Right? Bank Nifty have 34,000, which is very wide. Does not seems to be correct. and 36,000 is where the call writing support is seen in the open interest. Resistance seen at 37,500 and 37,000 is the resistance on the upside. 0.84 is the put call ratio, which is near to bullishness, you can say. 1.14 from the Nifty is also near to bullishness. Is more clear bullishness that is seen there. So long unwinding is what the futures oil build up is showing, and short build up is what of a Banknifty is showing. So Banknifty is bearish on the futures. The last build up again, the open interest data it's not time making mention that it's too much reliable since Friday was holiday, it was a truncated week, and then this is the data that is as of now available for the 16th September expiry. So the IB is still at the low levels of the implied volatility is 13, and then it's greater than the HIV, but the IB percentage is still at 16%. So India weeks is fallen 8% down after an 8% up move at the BSE. Right, so we have seen put call ratio is slightly bullish, but open interest data not reliable, but overall it shows bearishness, and on the futures and options both open interest, but we'll have to see for the next week because of the transition. So this is the open interest that we'll talk about on both things. Left is Nifty and right is overall you can see the highest writing is at the call side, which is bearish. Levels we already see. So sector watch, if you see the IT sector, it fell 2% last week after a non-stop rally that happened, right? So 2% of fall forming, it formed a spinning top weekly candle. That's what happened, right? 2% last week after a so it's probably maybe a beginning of a correction, but dollar is again regained the strength after a weakening previous week, so we can't be confirmed on that. So there is a daily bullish divergence also seen on the IT sector, so which again tells that again further continue the rally. But weekly wise there is a bearish divergence, which is just be cautious. We have to be cautiously bullish on the IT sector. So FMCG is consolidated a bit, but it is strong, right? It had made big moves on the center. It formed a weekly hammer candle, which shows bullish, and further up move can be expected on this. So the metal consolidated to form a weekly indecisive dodging. So previous some reversal signs were seen previous week, but it's still consolidating. We'll have to wait for the other side to catch up. Auto sector also is consolidating, and it's in the sideways. Both momentum is in the sideways, and it had a 1% of dip after the 2% of up. So reversal had happened. Reversal signals are there. Then metal and the auto and the pharma. All of these have, after the reversal bullish moves of 1 or 2% last week, metal, auto, and pharma both have shown bearishness this week. And the reality is bullish, and there's a cup and handle breakout that's happening. It had made a mega 11% bullish move, and then this week it was formed a indecisive after making an all-time high. So the sector is clear bullishness, and momentum is on long term and short term. Everything is bullish. So stock picks, Marico is one stock where just broken up the previous resistance, and weekly candle is what you see there. It can the FMCG sector is it's just started moving slowly. So it is broken out and it has not moved much, so there is further chance for moving upwards. Airtel has got a breakout from the previous resistance, and then it had momentum on the side, so that is also another pick. Index we already seen the back to institutional participation. If you see that 11,100 crore got sold by the Fyers last week, and DA sold 1,100 crore again. So it was balanced, right? Fyers and DA, so one guy sold by. So, but Fyers was selling this much is a concern again. And the derivative side, so the longs dipped last week, you can say. That's about the institutional participation. And then global markets, if you see the indices, all the US market, Nasdaq, S&P 500, and all the other indices closed red last week, after making an all-time high of the previous week, right? So the dollar has regained the strength once again after it dipped. So oil has shot up and then it continues to be there, and it's about zone on the resistance zone of 72.3. Currency pair also rebounded, and dollar again gained strength here. It's 1.2% more from the channel end edge on the downside. It bounced back and closed at above 73.5. Gold dipped 2.5%. Dollar had strengthened, so gold dipped, and it had dipped from a channel top, right? And now it has come back to this resistance zone from where it bounced up, right? So you can see that here. So gold had a bearish candle, dollar had an up move. That's the global commodities and the global market wrap up for the last week. Actionable would again be, or wake up positive strategies like, something on the calendar spreads, because the VIX levels are very low, continue to be low. It had moved up to 15 levels but could not sustain there. It has gone down, so again spikes can happen. So that's the actionable that can be done on the Nifty. On the stocks, we already discussed the breakout two stocks. So this is one strategy on the Banknifty where you can have 37,000 calendar spread that can be done. It's giving a reasonable risk reward, and it can work out. So the wrap up is that market is consolidating at an all-time high, and it has formed a weekly doji on the top of, Bank Nifty is yet to break out many of the February levels. 37,000 is 37,000 and all-time highs made in February. Still now that level has not broken, and it is showing some consolidation on the top. The dojis and indecisiveness. Overall by this bullishness, because the momentum and trend indicators are super bullish. So no doubt about the bullishness. So there is also a bullish reverse divergence, that's seen in the bank which, and there is a higher high, higher low pattern that is there, price action. So that shows that the bank can move further up, right? But caution is the word, because position entry at this time is risky unless we again see some kind of pattern or some kind of breakout on the Nifty and a clear higher high, higher up, higher low kind of moves. So caution is the word here once again, right? So if any breakout happens from the Bank Nifty's previous resistance, then we can say that Nifty can reach the 18,000. That's it. So VIX is concerned again. So whatever 8% up move happened, and then reaching the 50 level has given up and then fallen on 18% once again. Right. So low VIX is a concern. Continue to be difficult to trade. So intraday spikes can happen even. So both buyers and sellers continue to face this problem of having low premium and then the highly choppy intraday action. Yeah, so calendar spreads continue to be high probability wins, right? Personal trade can be trailed if you're already there. New entries has to be cautious, and exits should be based on the breach of the support levels. So that's more or less the same that wrap up similar to what was there in the last week also. So that's all. Thanks for watching, and if you're not subscribed, please subscribe, and happy trading and happy learning.